Welcome to Deals of Today. In the world of high-stakes deals, there is one that just dwarfs all the others right now: artificial intelligence. It's a total gold rush. We're talking incredible opportunity, massive risk, and numbers so big they're actually hard to wrap your head around. So let's place our first bet and just look at the sheer scale of this game. $5 trillion. That's the staggering valuation that NVIDIA just hit, the company making the chips that are powering this whole AI boom. Now, to put that into perspective, you could buy the entire economies of the UK, India, and Canada, and you'd still have some change left over. So this isn't just a big number, right? It's a huge signal of a fundamental shift happening in the market. And here's the kind of growth that number is built on. OpenAI's revenue grew 100% in just 7 months. 7 months. That rocketed them to a $12 billion annual run rate. I mean, think about it. We have literally never seen a software company scaled this fast in history. The acceleration is it's completely unprecedented. But of course, this incredible growth has the world's top financial leaders, from the IMF to JP Morgan, sounding the alarm. The enthusiasm is real for sure, but so are the echoes of past market manias. So the big question on everyone's mind is this a genuine revolution, or are we just watching a repeat of history? Let's actually dive into that question because it turns out we have absolutely seen this script play out before. Revolutionary technology, it seems, has this habit of creating a very, very predictable cycle of boom and bust. Yeah, for over 180 years, the pattern pretty much holds. A game-changing innovation appears, it ignites this speculative frenzy where all the valuations just detach from reality, a really painful crash follows, and then, out of all that wreckage, a new economic foundation is built. I mean, just look at the railway mania back in the 1840s. People were mortgaging their homes to buy shares with just 10% down before the market crashed 85%. Sound familiar? And then, of course, you had the dot-com bubble, where fortunes were poured into companies with zero profits. In both cases, most investors lost everything, but the infrastructure that was left behind, the railways and the internet, well, that fundamentally changed the world. So, how does today's AI boom stack up against all that history? Well, the parallels are pretty much impossible to ignore, and honestly, in some ways, today's situation looks even more extreme. Just look at this. Look at how concentrated the market has become. Today, the top 10 stocks in the S&P 500 make up almost 40% of its total value. That's a level of concentration that is way higher than even the peak of the dot-com bubble. And what that means is that the entire market is basically riding on the success of just a tiny handful of tech giants. And you've got Wall Street leaders pointing directly to the dot-com playbook. Goldman's David Solomon points out that markets always run ahead of the technology's real potential. And that creates this huge gap between the hype and the reality that eventually has to close. But there's always that powerful counterargument, isn't there? This time is different. The speed of adoption is just off the charts. It took the internet 7 years to get to 100 million users. ChatGPT did it in just 2 months. And here's the real kicker. AI might be the first technology in history that's actually capable of improving itself, which could create this unbelievable cycle of exponential progress. Okay, but let's pull back from the hype for a second and get back to reality. Because beneath all those soaring trillion-dollar valuations, the day-to-day operational reality for most businesses trying to actually use AI, well, it's proving to be much, much tougher. Get this, according to S&P Global, 42% of businesses scrapped most of their AI projects in 2024. That is a massive jump from just 17% the year before. So clearly, the initial hype is colliding with a huge wall of practical challenges. Yeah, for most companies, there's this giant chasm between the AI dream and the reality. They're stuck in what people are calling pilot purgatory. You've got messy data, a huge shortage of skilled people, and no clear return on investment. And it means that a staggering 95% of AI pilot programs are failing to actually impact the bottom line. And this isn't just a problem for the big enterprise companies. We're seeing the exact same pattern in the AI startup world, mirroring strategies from past bubbles. I mean, look at a case like Swiggy. They raised over $2 billion, but they burned through almost $700 million on discounts, just prioritizing growth over profit. It's the classic bubble playbook. Get big fast, and we'll figure out the business model later. And there's another hidden cost here, the immense demand for resources. The energy use for AI servers has more than tripled since 2014, and the amount of water needed to cool these gigantic data centers is creating some very real sustainability challenges. This revolution is running on a huge amount of power. So, where does that leave us? We have all the signs of a historic bubble on one hand and a truly transformative technology on the other. What's the real takeaway here? How do you navigate this moment? I think Amazon founder Jeff Bezos framed it perfectly. The core technology, AI, is real, and it will pay off for society, just like the automobile or the internet did. But, and this is a big but, that does not mean every company in the space is a good investment. In fact, if history tells us anything, it's that most of them won't be. And this points to one of the most successful strategies in any gold rush, right? Don't dig for gold, sell the shovels. The biggest winners so far, like NVIDIA, aren't necessarily the ones building all the different AI models. Nope. They're the ones building the fundamental hardware, those GPUs, that everyone else absolutely needs just to get in the game. And that leaves us right here, in this really rare and kind of strange moment where the bubble knows it's a bubble. Pretty much everyone can see the speculation, but the potential is just, it's too big to ignore. So the real question isn't if the bubble will eventually pop, it's what's the smartest move to make while the game is still being played.